Morning, people. It's the 11th of August. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning.
How you doing?
Yeah, bright, up and early, bright as a button I am.
Good.
It's not nice day, nice weather out there today.
Yeah, it's looking good for the next couple of days. Let's hope it stays a bit longer.
Yeah, it'd be nice.
Indeed. Looks as though the sun is shining on Bitcoin again as well. There's been chat of that getting back to 100,000.
Of course,
Just
yes.
doubling from here. Yeah, we'll see.
Yeah.
We'll come on to that in a moment, but just a quick roundup on the headlines. So President Joe Biden's big spending plans got a boost yesterday as the Senate passed a $550 billion infrastructure bill, which is the biggest US public works package in decades. Obviously, that was one of his main promises, so it looks like that's going to press ahead, which is good for the US economy. Looking at what's going on with cryptocurrency, as we mentioned, there are some predictions of 100,000 being back on the cards now, given that Bitcoin has staged quite a significant rebound that's taken it more than 50% above its recent lows. We'll come on to the charts shortly and get Steve's view from a technical perspective, and we'll obviously follow up on that. In terms of what's going on in the markets in general, stocks a bit of a muted start, fairly typical for this time of year. Summer doldrums very much underway, where many participants are away on holiday, and that means that markets don't tend to go anywhere. So it's a quieter day in the US from the earnings side of things. We do have actually some numbers out from eBay. I don't think they have the sway that they once had, and when it comes to tech numbers, everybody's looking at the FANG and the Fatman stocks. We've got a latest phone from Samsung, which is set to be unveiled today as well. That's pretty much it. So, Steve, let's get stuck into some charts. Where do you want to start today?
Well, first of all, I'd like to say congratulations on the 3 new words you've just made up.
What did I make?
Just I was thrown by the unveiled or
Unveiled.
What was it? Yeah,
I
but
meant
it's
to be
sort of
unveiled.
unveiled. I like it.
Unveiling.
Revealed, unveiled. Yeah, exactly.
Reveal, unveil. Yeah, exactly. Hybrid
And
word.
yeah, and there's a sort of like every way or something. I can't remember. I've lost it now because I got quite
Oh,
excited. I'm not
sorry.
the only one that makes up new words. That's
Yeah,
great.
so I'm getting a bit confused. It's too early. I
Good to
haven't had
see.
any food today. I think that's what the issue is.
It's good to see it's catching. Yeah, we'll dive into Bitcoin quickly because obviously it's going to it's rapidly on its way to 100,000. So I don't want to miss it by starting the analysis, and that by the end of it it'll be at 100,000. Yeah, there is potential for that, obviously, but that would mean that the dollar would have collapsed with 50% inflation in the US and things like that. So let's not all get carried away. Like some of these other alternate coins like Ripple, Cardano, they're not getting carried away, although Cardano had a little bit of a catch up yesterday, getting up to its 61.8 fib retracement level that comes in around about 188, 176 trading. So that's had a nice move higher yesterday. Ripple, again, sort of like the fourth positive week we've seen. That's up at 90. Still a bit of a way to go to. Let's get some fibs on there as well, so we know where we're heading. I mean, it hasn't even got to the 38.2% fib. So there's our favorite 161.8 right up here. Still a long way to go. But yeah, so Bitcoin close to the 50% retracement. Expect it to move higher than this. Looking at 51 to 52,000. Shouldn't be much of a push really for Bitcoin. On the daily chart, yesterday was a little bit of a muted day, a little bit of a hanging man candle, but we expected to push on from there today up towards the resistance above. So really looking for to negate this move, we need to pull back below 41,000. The 4-hour chart is showing things a bit better. This would be really the pivot level for me. So quite happy to be long above the 41,000 level, targeting the move to 51, 52 initially. But beware a break below the 41,000. I think that's back on the back foot. Still sort of not completely giving up on this head and shoulders formation. I think it will need to be redrawn at some point. It is going to be a complex formation, But yeah, a move up to really, we need to sort of get above 60,000 before I completely give up on anything like that. So that's the crypto, and that's the sort of summary of what I think about the 100,000 level. Why stop there? Hey, on here, obviously, keep showing you this monthly chart on oil, potential for a reversal here, or at least a correction lower. I won't say reversal just yet, but that is a really significant topping formation, and but we need to get to the end of August really with prices down here to confirm that. That'll be an evening doji star formation. On the daily chart, we've had prices jump back above the upward trending support line. We can redraw a line here, have another potential line here, but I'll leave this one in here just for the moment. Positive day, bullish hammer on the 9th, positive day yesterday, so that's a nice correction, and the bulls have got the bull by the horns at the moment. On the 4-hour chart, still a bit of a way to go. Really need to sort of push above the $69 level. 69.50 would be great. And is there a potential for an inverse head and shoulders? See, I'm not just a bear on everything. Inverse head and shoulders, potentially. Still could sort of like make our way up to the 69.70 level before maybe a retracement back to 67. So opportunity maybe for the correction higher and back onto the bull tack there. In gold, this has been my gun to head challenge for the last 4 or 5 days. It's still under pressure. No real sort of recovery yet from yesterday's price action. We ended up with a doji candle yesterday, which is a sign of indecision. And we've got off to a positive start this morning, really sort of like being driven by the dollar influence at the moment. And the yeah, and then sort of like better value elsewhere apparently. So 1750 for me is the real resistance level. 1755 we've also got, so quite a nice little barrier here, but really haven't attempted to move much higher than 1738. So the longer we sort of like go along in this sideways formation, the more nervous I would be for a retest of the break we saw on Sunday night down to 1670. On the indices front, we got a nice little high in FTSE. That's the highest it's been since 16th of June. Not far away from this year's high, 72.18. Only a matter of 30 points. Looking very positive there, obviously assisted by the dollar bull run we're seeing. We're seeing another level which we've seen going all the way back to mid-June as well on the DAX side of things. So this is slightly outperforming the FTSE on that basis, where we've seen rejection from this level just above 15,800. We're trading about 40 points lower than that. Still feels a little bit bubbly. Or are we going to be deflated? Potential for a double top formation if we can get a break back below 15,700. So teetering at the moment, but you have got this cloud support, the trend support coming in, supporting DAX at the moment. On the Dow side of things, let's talk about all-time highs again. 35,281 on this chart. And this is the 4-hour chart, and since then we've had a little bit of a pullback, but not much of one. And again, still looking positive. No real change in that. We can see support coming in around about the 35,000 level and below, all the way down. So no change on the US side of things on the indices. Tech stocks, all-time high at the moment we've got is 15,183. We saw a bit of a reversal yesterday, bearish outside candle on the 4-hour chart, which has led to negative price action. So it's a little bit interesting. We could get a little bit more of a correction here. This is where support comes in. We're trading just above it, 15,000. Psychological level just above that 15,010 is where we've got down to. A break there could take us through the cloud and put us on the back foot as far as Nasdaq's concerned, and that would form a double top formation. The measured move target for something like that. Let me just see, measured move target down around next support, really 14,835. So watch out for that in the Nasdaq. So Dow looks quite nice, Nasdaq looks a little bit shaky. Our S&P as well as same as Dow, really looking very positive. Would be looking to buy dips. We're above the previous resistance at 44.31 and holding above there nicely, and good support below all the way down. So really positive. Aussie 200, significant high posted yesterday, but it was then turned into a bit of a bearish candle. Sorry, this is a 4-hour chart, bit of a bearish candle in the 4-hour chart. This is from 2 o'clock to 6 o'clock this morning. That's a shooting star candle, but it looks to be negated with the next 4-hour bar that completes at 10 o'clock. So we've got an hour of, and if we hold above here, that'll probably negate that candle. So Aussie 200 looking quite cool, despite the sort of like the setback we've seen in commodities. On China 50, that's broken out of the triangle formation and looks really positive. But again, we've seen this reversal overnight. So maybe the bears coming back in and throwing their weight about. Hang Seng, not quite as much, a little bit quieter, a little bit more muted. And the Nikkei has resistance here at 28,150 before 28,300 comes in as the next resistance, looking quite positive on the Nikkei. I think that about much covers the markets I look at, Joe.
No, it's great, Steve. Thank you. Okay, FX. Dollar index first up. So looking pretty positive still. So 4 consecutive days of higher prices. We're up again this morning. And now we're testing this resistance level from the highs that we posted on the 21st of July. So getting ever closer to that 93.43 level, which is all important. Certainly in my eyes, because if I look at the weekly chart, for me, that is the level that needs to be overcome in order to complete this double bottom pattern. Once we complete that double bottom pattern, then we should be looking for higher prices over the medium term, up to sort of 97.70. So very important here to see what happens. Clearly, momentum seems to be pretty bullish on the dollar index for now, so I am expecting an eventual break of this level. If we look at it from an intraday perspective or on the daily chart, then there is every possibility that it could face a little bit of resistance here, maybe come off a little bit prior to having another test at breaking through. It may even need some news out or a positive reading from one of the economic figures in the US in order to burst through, but overall it looks pretty positive. And of course, this is having a negative impact on what we see on euro dollar. This is getting ever closer to completing this head and shoulders top pattern. So really been quite a significant period of weakness here. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9 negative candles so far today. And Steve will tell you that you're not allowed more than 9 candles in a row.
Not allowed it. No.
In one direction. So we're at this key level of support at 117.04. I wouldn't be surprised if we see some form of defense from the bulls on this in the very short term. Maybe a little bit of consolidation before an eventual break. And when it does break, what I really would like to see is quite an impulsive move, because I think it's completing quite a significant pattern here on the daily chart, which would indicate a massive turnaround in terms of the overall trend, and we will be looking for lower prices down to 110.56 over the medium term. So intraday, I'd be wary about selling it here. If you're an ultra speculative trader, then maybe there are some opportunities for a buy on an intraday basis, but snap up your profits pretty quickly if you are buying it here, because I think eventually it is going to see a fairly significant break to the downside. Looking at some of the other markets, Aussie US dollar was my gun to the head trade yesterday. This has completed a top pattern already and is moving lower. No signs of that slowing. So we appear to have broken out of a flag pattern yesterday. It wasn't really anything momentum-wise that dragged it lower yesterday, but still fancy that lower. Down to sort of 70.57 initially, then maybe as low as 67.64 over the medium term. Euro sterling is quite interesting because it's trading around a significant level. We did see a close below this support level yesterday at 84.72, and that's the lowest price that we've seen on euro dollar for some time. We actually have to go back to February 2020. But as you can see here, there's a lot of space for this to move into on the downside, having broken this support. We are attempting to recover some of the losses that we made yesterday. So maybe there will be a bit of a retest up to this kind of level here at 85.10 before the sellers step in again and we see lower prices. Clearly, the overall trend, remains bearish and has done really since September last year. So I wouldn't be surprised to see lower prices there. Cable hasn't been doing an awful lot. It's although moving lower, the price ranges have been quite limited. I do think this is also in the process of forming a top, but we obviously need to see this breakout in the dollar index to confirm that and for more strength to be seen there. So limited opportunities, I think, still on cable. If we look at some of these US dollar pairs, dollar yen breaking out of this consolidation and moving higher, no signs of that slowing down. Next test for me would be up at 111.70 ish, which is these previous highs that we posted back here in the early part of July. Dollar Swiss was looking pretty strong, really nice bounce from the support at 90.50 ish. Next test of resistance there is at 92.75. If it breaks that, then we're looking for higher prices up to these resistance levels posted back in March earlier this year. And dollar CAD, since breaking out of this wedge, we are seeing higher prices, and I wouldn't be surprised if we continue to see higher prices. We need to overcome this level here at 128.07. And if we do, then we'll be looking obviously for a continuation to the upside. So all eyes on the dollar. It's getting very close to that key resistance level at 93.43. Looks a little bit stretched in the very, very short term, but I still think it's going to get there eventually.
Like it.
That's it from me.
Interesting. Yeah. That sort of like has made my mind up on my cunt head, but I'm not going to tell you just yet.
Okay, well, your hot streak continued yesterday, Steve. Although it wasn't a humdinger of a win, it was a win nonetheless. You made 1R yesterday, so that is just 9.8R you've made in the last 5 sessions.
Nice. Is that an all-time high, or am I still a little bit of a way off for me?
Yeah, you hit 32 up here.
Okay, a little bit of a way to go.
Not far. You're only one good trade away.
Mm.
So in comparison, my last 5 trades, I'm down 0.16R. So absolutely smashing it at the minute, Steve. What are you fancying today then?
Well, you know what I'm going to go for? It's a bit of a mess, my chart. I'm quite embarrassed about it. But, okay.
You know what you can see,
just
though, right?
Bear with me on this one. So this isn't a classic head and shoulders pattern, and there'll be a lot of analysts screaming at me out there saying, no, that's not a head and shoulders pattern, because a real head and shoulders pattern happens at the bottom of the downtrend. So we've had this downtrend here. I've gone into a really short-term chart for this because I think we could, looking at what you've just told me about the dollar, we're finding there's a big resistance here. We do feel a bit overstretched. We've had quite a big move in the dollar sort of like based assets like gold, and so maybe there is a chance of a small correction. So I've been selling gold over the last 5 or 6 times, and maybe I'm looking for this move. So okay, it's not a classic head and shoulders formation, but it looks like a bit of a complex formation. But it's the price action that happens within these charts that tells me that this is a bit of a bottoming formation. So it's a bit of a, although, yeah, so if we ignore everything to the left and we just started from this day, then it would look okay. But obviously what has happened to the left has happened to the left. But anyway, just the price action showing that we're now getting higher lows, and it's on a short-term chart, so it very sort of like very focused on the intraday trade idea. You can draw a trend line in here with these connecting these 3 points, albeit not exactly, but it is still, for me, offers a good opportunity for a good risk-reward trade. The cloud as well, we're broken through the cloud. The cloud is one of my favorite indicators to use. It's a system all in its own, one of the most successful standalone indicators in technical analysis. Yes, you heard it here. Probably not first. So yeah, and the candles that we formed over these like 15-minute candles are bullish hammers and positive looking. So I'm going to, based on what Joe said about the dollar and the sort of resistance it faces now, I think this will be very driven by that. So I'm going to buy gold here. My stop is going to be pretty tight. So the gold is trading 1731.85 at the moment, and I'm not going to really. It's yeah, 4-1 feels like a good one. Is a stop too tight? Maybe it is. So let's like rein it back in a little bit. Let's go 3-1 on this. Yeah, that'll be my target. 1745. I think it feels like it's easily achievable because the real resistance comes in at 1750. It's a very high risk intraday short-term trade idea. Stop is at 1727.35. Getting in here 1731.85, targeting 1745.35. 3-1 risk reward. I feel like that's maybe an opportunity because of it does fit. We do feel a bit overstretched on the downside.
Yeah, I'm going to go along the same lines. I don't think euro dollar is going up over any prolonged period of time, but just on a purely intraday basis, it's on a massive level of support. And obviously, euro dollar is one of the most traded, if not the most traded market that people look at. So when you see massive levels of support, they can often be very well watched and therefore very well supported from traders. So this red line that I've got an hourly chart here. As you can see, this is the key low that we posted back in March earlier this year. So for me, this is going to be a level that's well watched. I think it's going to be some attempt at trying to defend it. Therefore, as you can see on this 4-hour chart, we're posting maybe a bit of a hammer candle. So I'm going to try and buy it from a speculative point of view. It's currently trading at 117.18. Let's just zoom in for an hour chart for a bit more finesse. So going to have a stop loss below that level at 116.96, and I'm going to target a move up to 117.78. So looking for 2.8 R on that one today.
Good luck with that. If I feel like we're walking into a bit of a trap, Joe, don't you?
Yeah, absolutely it is. But you know, we've got a gun to our head, so what do we do?
Exactly.
We're
So this
calling
is
it
all
how we
just a
see
bit
it.
of fun. But yeah, that's I feel like there's an opportunity, there's a chance. Obviously, I'm still bearish on gold. That's why I'm not going for a huge target. So
Yeah, cool.
and yeah, just a little
Just
correction.
two-way trading, Steve. Just
Yeah.
you know, we get in, we get out. That's what we do.
Nice, like that.
Let's hope so anyway. Okay, data-wise today, US inflation, CPI inflation at 130. Obviously, that's going to be very well watched. Headline year-on-year inflation expected to remain steady at 5.4%, while core CPI is predicted to decline from 4.5% to 4.4%. That would be the number I'll be watching, because if that actually comes in ahead of what the expectations were, then obviously there'll be more concerns about inflation. And therefore the need to raise interest rates and obviously taper assets. So keep an eye on that 130. I think that will probably affect everything to do with the global economy, to be totally honest. So they've said here US dollar crosses and global indices are the key areas to watch. And then at 3:30 we have the US EIA crude inventory numbers. Previous week 3.6 million. So the highest inventory build in almost 5 months. So we'll be keeping an eye on that, and obviously on those oil charts tomorrow. So yeah, plenty going on today.
Brilliant.
Anything to add,
Good luck.
Steve?
No, not really. Good luck with everything, and let's keep coming up with the new words.
Indeed. Have a great day.
Cheers.
Cheers. Bye.